Sounds great.
All right, and we're live. We're recording. Hey Andrew, it's my pleasure, my honor to talk to you. Maybe for the people that are new to the series, about a year ago I started the Ethereum community series, and the idea was to talk to knowledgeable people in the community. They didn't have to be developers or investors per se, but just people that are engaged in the community. And so I had the pleasure of talking to Amin from SpankChain, JD Nickel, one of the moderators, Paul Brody from EY, Vitalik, and after a small break, I'd say I'm really happy to kick off this series again with you. So thank you very much for being here.
Thank you. It's a pleasure to be here, Kobe. I've enjoyed your series and looking forward to our talk today.
Before we have one very fun question that I really look forward to asking, but I will just ask you this. Can you introduce yourself? Can you give us a summary or a bio about who you are and what you're doing right now?
Sure. So I sat intersection of the capital markets and technology for about 15 years. I worked at an investment bank, UBS. I worked building a medical database company where I learned between those two endeavors everything that was wrong with databases and payment systems at the same time that Bitcoin happened. And I thought that Bitcoin was a genius experiment in monetary theory and also a breakthrough in computer science, solving the double spend and the Byzantine generals problem, but I thought it was lacking the concept of business logic. Alice could pay Bob peer to peer, but we couldn't say if X happens, then payment, else failure. That type of business logic, which we now have termed, not necessarily correctly, but have termed as smart contracts. I would say more kind of digitized commitments would probably be maybe a slightly better verbiage. But once I grasped the concept of the real programmability of a peer-to-peer network like Ethereum, I quickly went down the rabbit hole and was lucky enough to meet one of the co-founders of Ethereum, Joe Lubin, at the first ever Ethereum meetup in Manhattan. So the first ever time it was really spoken about. And I fell down that rabbit hole even farther with his help and Vitalik's help, and helped build Consensus, which I assume many people know is now the largest software engineering shop in the world that's dedicated to building blockchain technology solutions. And there, I wore a few hats. I drove a lot of the enterprise and government education, wherein we basically built the first blockchain as a service. So people all around the world, from small startups to large enterprises, would be able to create a sandbox on Microsoft's Azure platform, and basically drove Microsoft's education in permeating this on a global scale. I helped create the Enterprise Ethereum Alliance, which is now the largest open source blockchain initiative on Earth, that's centered around driving standards for those technology historians. When Java became J2EE, Java 2 Enterprise Edition, it had clean web APIs and clean database APIs. So it had standards. Whether you were in Mumbai, Paris, San Francisco, or Belgium, you would have the same processes to build software. And we kind of took a page out of that book to create standards for things like identity, for things like tokens, for things like reputation, up and down the stack. So the idea is an engineer would always be able to use these standards, and basically the technology that underpins Ethereum could proliferate faster. So many large enterprises like Microsoft, JP Morgan, British Petroleum, Procter and Gamble are now part of that initiative. And lastly, I helped build out a lot of the capital markets focused processes within Consensus. So helped with the venture fund, Consensus Ventures, helped with Token Foundry, which was the tokenization of utility tokens, and then subsequent some security tokens. Now it's evolved, and and kind of the foregrounds of the asset management business, which really was when I, after a few years, resigned from Consensus, and I still advise them and work closely with them and respect them tremendously. But basically, wanted to build an asset manager to invest in this technology, and it was somewhat difficult to build a regulated institutional fund that really needs maybe 10 to 20 people to operate without kind of, to use a simple word, polluting the other 1,000 that were at Consensus. So I resigned from Consensus and helped create Darma Capital. Darma stands for Digital Asset Risk Management Advisors. It was also with the head of capital markets at Consensus, a gentleman by the name of James Slazis, and his brother John, who is a quant that sat on the Chicago Mercantile Exchange. And basically, have one of, I think, the largest Ethereum pools in the world, where our goal is to generate alpha or outperformance to the benchmark of the price of Ether. And we are a commodity pool operator, commodity trading advisor, and basically that's our initial product. We could also do other versions of that for other assets, and we could also have venture investing as well, and we do a little bit of that now. But I think that's a decent starting point.
There's many things to touch on. Let me start here. I forgot to ask. You don't come from the developer side, but you come from the business management side. Is that right?
I would say my best computer science was in college, and it was technically downhill since then. I think I have enough of the technology understanding to understand architecture, but I would say my core competence is on the capital market side of the house.
So we will do the questions, the Q&A from the community, from the ETH Finance topic that I opened first, and then we'll go over the 20 blockchain predictions, the essay that you wrote, the new essay that you published at the beginning of this year. So let me just go to the subreddit. Let me refresh, see if I have all of them. Also a thank you or a shout out. Thank you to all the people who submitted questions. Makes my job easier. Let's start here. Toxic Badgers asked, are you related to Alicia Keys? Why or why not?
I'm not, but I wish I was because she's beautiful.
Then a little bit more serious, DC Investor asks, do you believe ETH must become an important global financial asset in order for Ethereum to succeed? What do you feel is needed for the broader world to take ETH seriously as a financial asset?
So I think that, yes, I do. And I think that it is already starting. I think that we are less than 1/1000th of penetration, but I do believe that Ether needs to be a reserve asset, meaning like a collateral reserve asset, how we're seeing Ether collateralized in decentralized finance for being able to take stablecoin loans. I think we need it in terms of to pay for computation, where we're obviously with gas, and what we're seeing is I think Eric Connor's EIP 1559 proposal to have an actual burning mechanism, and really the third aspect of it to be able to create yield in staking. So I think we can see it. I think David Hoffman does my favorite representation where he calls it a triple point asset, where it is collateral, it is something that produces yield, it is a medium of exchange, and it is scarce. So I guess that's 4 points. And so I do think it does need, I consider it a next generation asset class in so much as it is a crypto commodity. And I think that, digital oil for Ether and the corroboration of gas is a much better and much more sound example than Bitcoin's digital gold, because there's an actual economy that's being run under the digital oil, using the digital oil of Ether, where we really do have a material improvement on the way society agrees or disagrees in this trustless peer-to-peer manner.
Do you think though, or do you wonder that people who aren't in the cryptocurrency sphere already, that they might get their feet wet with Bitcoin first because the narrative is more set and because it's more clear? Is that a short-term or a long-term disadvantage that Ether has, that it isn't as clear?
So I think that's a great question, and I try to, as much as I can. I've only spent 38 years on Earth so far, and I try to look at this in terms of millennia, and obviously Bitcoin's been around for 10 years, and Alice pays Bob without the bank in the middle is a very simple conversation versus explaining what a decentralized World Wide Web could look like and why you need this micropayment of fuel. It's a bit more of a complicated concept, but similar to how the internet was explained in the early and mid 90s, what I hope will happen is abstraction of that conversation, and just usage is really what is going to matter, where people really over the next 2 years, with user experience and user interface improvements, really don't even have to think about what is Ether, what is Ethereum, but really just want to use decentralized applications because it either creates more value for the producer of a product or service or consumer of a product or service, and basically relegates the value from the intermediaries to the counterparties instead.
You mentioned Eric Connor's EIP. Is that because the second part of DC Investors' question was what do you feel is needed to for the broader world to take ETH seriously as a financial asset? What steps do you think have to be taken for the broader financial world to go there?
So I'm going to answer that with what I think the number one, and I didn't reference this in my predictions of 2020, but I think this is important. I think the number one use case of 2019 was Santander, the Spanish bank, one of the largest banks in the world, issuing a bond on public Ethereum, not in a permissioned context, not intranet, but internet, public permissionless Ethereum. And what I think the world needs to see is more use cases like that, and really for the CTOs of the world. And I think John Whelan did an amazing job of showing the art of the possible within the doors of a regulated financial institution. And I know that could be somewhat controversial because with decentralized finance, you don't necessarily need the bank, but I think that for other institutions to grasp the art of the possible, we need thought leaders like that to continue to build proofs of concepts. The other side of that coin is obviously we have that application layer financial instrument created, but we also need the maturing of the protocol. So we need obviously improvements to scalability, and we're seeing that at layer 2 with technologies like Scale, which I'm very bullish on. Obviously, layer 1 is evolving not as fast as everyone would like, but the bottom line is this is the bleeding edge of distributed computing research, and this is not easy, as we can evidence by all of the ETH killers really haven't come out or done any killing or have showed any scalability. So everyone's got the same problems, and I think that there is a lot of brilliant research And I would say the strongest research is coming out of the Ethereum community on solving those problems. And I think that the other aspect is privacy. And we're seeing brilliant evolutions in technology like ZK snarks. And I think that to Ethereum's credit, it is now the largest engineering ecosystem. And really, you've got to follow the devs. And the devs will, I would say, investment and applications will lag maybe 3 years, but a great, I would say, front runner of when people speculate onto what technologies will work, is where you see large engineering communities, and by far it is the largest engineering community. And to its credit, you can see things. I think a great example is Zcash, where Zuko is a brilliant cryptographer, mathematician, computer scientist, and created the concept, or not created, but evolved the concept of zero knowledge proofs, and that is open source technology. And Ethereum said, "Great, we can use zero knowledge proofs in Ethereum." There could be other great open source technologies like Polkadot Substrate, and you could see that forked and used in Ethereum as well. You could see, the concept of Dfinity's heartbeat. You could see that was informed, in my opinion, the roadmap of Ethereum's beacon chain. So the great thing about open source software is that once you have this strong, robust engineering community, they can take the best of what's being researched and what's being built and use it to further broaden Ethereum's reach.
So what you're saying is, once that you have that broad, robust engineering, that pool of engineers, you can actually go and see whatever bleeding edge technology is being built and then just port it onto Ethereum. I think the first time I read about this was Amin back in the day when he started the Moloch DAO. He mentioned that funds could be used in order to port Substrate or just fork Substrate onto Ethereum. So that was a great example of how the bigger engineering community actually makes a difference in the long term. It's just what you're saying right now.
Agreed.
Yeah.
A million devs, just like what Joe Lubin wants. I think that you get a million engineers, and the rest will fall into place.
I can't remember. I just can't remember this guy's name on Twitter. I know. I think it's Spencer Noon, and he makes these lists whenever he's in the jury of a hackathon or something like that. And he makes lists with projects that are being born or built on the hackathons, and you just go through them, and I'm surprised by the rate of innovation and just seeing all the things that are happening within the RDAI and all the kind of different tokens that are being built. But it's just fascinating for myself as a non-dev. It's just fascinating to see what people are even thinking about, and then they're implementing it. And so to that point, I also wanted to go back. You mentioned the importance of the bond, of the Santander bond. If I remember correctly, it was both issued and settled on Ethereum. But could you go a little bit deeper into what exactly that means and why that was so important for outsiders who might not have noticed the importance?
So I think the two pieces that I think that are important to me are: one was a regulated financial institution successfully creating a full product life cycle of a financial instrument. Santander is one of the best, largest banks in the world, and that amongst its peers, I know people at BNP Paribas whose ears and eyes were raised, and at Goldman Sachs and at JP Morgan. That's where, and JP Morgan did a great job of creating Quorum, this permission flavor of Ethereum. And I think that, to use a poor man's analogy, the world started at intranets when the internet, HTTP and TCP/IP was growing up. But once HTTP and TCP/IP and the other internet protocols evolved, people moved from intranet to internet. And I think that this was kind of that first step really showing the art of the possible, and his thought leadership was really remarkable in that regard. And so I think A, creating the actual financial instruments, showing that was possible, and B, showing that a regulated financial institution could use public permissionless Ethereum. And I think that just having that prior to scalability, prior to evolutions in privacy and confidentiality, like the ZK snarks where they are now versus where they could be for the rest of history. And back to your question about Bitcoin versus Ethereum. We look at this in a scope of time, and unfortunately, if we're lucky, have 100 years on Earth, but there's literally the rest of history for this story to unfold and evolve. And if everyone learned about Bitcoin first because it showed the art of the possible, and it showed peer-to-peer value transfer, and it solved the Byzantine generals problem, solved the double spend, if you will, of digital assets. But we have a long time to go, and I really think that the notion is digitizing the global economy versus digitizing, let's just say, storage value.
Mm-hmm. Yeah, there's this example. The narrative or the story I read quite often is that if you have your wealth stored in an economy or if you have it stored somewhere where hyperinflation takes place, then even Bitcoin's 80% drops don't matter that much. But then you discover something like DAI, a stable coin, and that's the logical next step. And then you start thinking about, well, there's this entrance into the cryptocurrency and the decentralization innovation that's happening, but then there's next steps as well. And then DAI is a great example. And then you see all the innovation that's happening around whatever DAI creates or makes possible. There was another question from DC. So, in which areas do you see the greatest potential for businesses to make productive use of the public Ethereum mainnet? And what do you feel are the biggest barriers to their use of the mainnet right now?
Sure. So one sleeping giant that I reference, and we're seeing the forefront of it is supply chain, tracking the provenance of an asset from its birth to its retail consumer, I think is important, via non-fungible tokens. Attaching to that, trade finance. So, a wholesaler can send it to a retailer, and you can have a net 90-day accounts receivable. So the retailer has time to sell it to the consumer, and basically having kind of all the trustless processes and re-architecture of the supply chain provenance, and who is the fiduciary responsible for the ownership of that asset wherever it lies in supply chain. And I think Trium, driven by people like Tyler Mulvihill and Kishore Atreya, have done a great job illustrating that with companies large and small and nonprofits, everyone from the World Wildlife Foundation to Fortune 500s. I think that's one. I think we're already starting to see decentralized finance work. I think that I'm not necessarily sure how regulatory bodies are going to I want to be careful and deliberate in the choice of my words, how they're going to react to decentralized finance when this becomes too big to ignore. I think that a great example is in the United States. In all 50 states, you need a license to get a loan or to give a loan. And I don't know if, for example, the larger decentralized financial players have those 50 states licenses. And because it's literally decentralized, someone from Jamaica, Queens, or Jamaica the country, or the Philippines, or San Francisco could all get a loan permissionlessly. And I think that when you talk about kind of companies like Uber that said, we'll pay the fine, and we'll grow at all costs, blitz scaling, and that with taxis, albeit that does, people have to worry about their safety within a car. That's a slightly different, and I think a little less on the scale of worry of decentralized financial instruments and the concept of currency and money. So I think that it'll be a little bit higher on the totem pole for regulatory clarity.
Just a thought. I've seen some discussion about the degree to which DeFi or decentralized finance is actually decentralized, and you touch on it. Like, I want to ask you how to rhyme businesses building DeFi with DeFi itself. When I look at synthetics, for example, or even compound to some degree, yes, they're part of the DeFi. When we talk about the 1 billion in DeFi, which you refer to in the predictions as well, $1 billion being locked up in DeFi. How do you think about the line between decentralized finance not being all that decentralized as people might assume that it is?
So I think that decentralization starts from centralization. One person has to create something for it to spread. And we are in the years of the proof of concept. We are in the years of alpha. We are in 1996. And the analogy that I used in a previous prediction is from 96 to 06, 85% of .coms went to zero. And we didn't even have the first Apple app, Apple Store, iStore app until 2007. So we're going to have 10 years. I think this will go a lot faster. So let's say half that time. We're going to have 5 years of proofs of concepts, alphas, betas, while the protocol is maturing, improving scalability, improving privacy. And then we're going to have Cambrian explosion, where you're going to either have, I would say, clear, transparent assets or opaque, dark assets, if you will. And the clear, transparent assets will be natively digital on Ethereum, and the opaque ones, and you can even think of these for like nonprofit foundations. You could have one that you can see where every single penny goes, versus one where you don't have that type of transparency. So I think that we are in the early days of decentralizing all the things, but that is the progression of where we have to go. I think that there are other aspects of DeFi that I've referenced. Is that right now it's not banking the unbanked, because you have to have 3 times the collateral in order to open a loan. I think the process that will solve that is the evolution of the concept of reputation. I think that when we start really creating a true reputation system, where you have, let's say, canonical Kobe, then you have worker Kobe, then you have recreational Kobe, ride sharing Kobe, house sharing Kobe. And in today's paradigm, ride sharing Kobe uses Uber, and if Uber takes 5,000 rides, or takes Kobe on 5,000 rides, and he gets 5 stars on every single one, if he goes to rent an Airbnb, he can't use those 5,000 reputational thumbs up towards his Airbnb, because Uber owns it and Airbnb owns the reputation. And similarly, worker Kobe or credit score Kobe is owned by Equifax or LinkedIn, where we can really put whatever we want on our LinkedIns. So where I'm going with this is that we need to build out in addition to kind of decentralizing the lending pools, we need to also build out reputational attributes that we can really use. So DeFi doesn't just help people that already have the money that want to over collateralize a loan. And I think the lending rates are egregious. For something, if you had 100 million, the way I would say entrepreneurs, you could take like Elon Musk or Larry Ellison. All of these people have stock in their respective companies. Elon with Tesla, Larry Ellison with Oracle. They never sell it. They can take their stock, they can give it to Morgan Stanley, and they can get a loan on their stock that's has a much less loan to value necessary than if you have Maker or Compound, and they have a 2% interest rate on the assets that are over collateralized, where you're doing basically the same thing with Ether, and it's almost double digits. So I think that while critiquing DeFi, I think that's an issue, but the converse of that is people in a yield-starved world are learning that what a stable token is, and it's pegged to the dollar or the pound or the euro, and that it can earn greater interest than what's being offered in the legacy ecosystems.
There, I think quite a few people learned this the hard way right after the CDPs or MakerDAO went live with the CDPs. They remained at a stability fee of 0.5, 1, 2% for quite a while. And then I cannot time this exactly, but they went up to 20%. And many people, I think, including myself, assumed that those rates were they weren't locked, but there was the assumption that they would just stay at 1 or 2%. And then they went up all the way to 17.5 or 20%. Then that was part of, I guess that's part of what you're referring to, bridging the decentralized finance with the example you gave of Musk or Larry.
Yeah.
Just coming back to DC's question, what the second part of the question, what do you feel are the biggest barriers to the use for businesses to the use of Maenette right now?
Yep.
Is it the thing? Sorry to interrupt.
No,
the thing you always hear is scalability, and I had the pleasure of talking to Paul Brody, and he mentioned something that made a click for me. He said that if he used the example of 3D printing, and he said, look, if I have to FedEx you a spare part, it will take at least 24 hours overnight to get it to you. But if you have a 3D printer, it doesn't matter if it prints it in 1 or 3 hours. The advantage or the gain is still at least 20 hours. So he compared the scalability issue. He didn't see it as such a big problem for enterprises to wet their feet as Santander did, for example. Is that something you agree with? How do you think about this?
So I completely agree with Paul's point, and I think he deserves a shout out, just like John Whelan at Santander. Paul Brody is leading the world from a, I would say, management consulting perspective in creating processes and technology for enterprises to be able to adopt Ethereum. So what Paul's done so elegantly is create Nightfall, which is an evolution of ZK Snarks that can be used on Ethereum to protect data and create privacy and confidentiality modalities for enterprises. So I think that so I agree on the, let's say on the scale, I would say scalability is last for talking about enterprise use cases. First, I would say is privacy confidentiality. Second, I think is, let's just call it clean ether. And what I mean by that is that for a Fortune 500 company to use Ethereum, they will need, I imagine, and I don't want to speak specifically on Santander's bond, but I doubt the amount of Ether used was more than $10 equivalent. but Fortune 500s are going to have to acquire that ether and custody the ether and use it in a kind of a new paradigm. They're used to paying Azure cloud storage or AWS cloud storage. This is now essentially acquiring a commodity like you and I acquire gasoline to drive our cars, and that's a new paradigm. And so there are things like ETH gas station where you can have provenance clean ether that could just be used like per transaction, if you will. And I think that that's another area of opportunity to continue to evolve. So I would say privacy confidentiality would be first. Aspects of having, let's just say, cleanly sourced ether to be used for transactions by enterprises. And then third would be scalability, because I do think, in whether it's DeFi or supply chains right now, there's such a improvement versus what companies are used to in upgrading the technology. And we're not talking about, if we were talking about consumer, everything has got to be as good as Web 2 apps, because we can all preach decentralization, but John Doe, everyday user, the other 99.9% of the world that's not in this blockchain bubble, all they care about is using their apps as efficiently as they typically do in the legacy internet. So you're going to need scalability much more appropriate for that. You're going to have to abstract away the concept of even like a MetaMask like process like that. I feel like that's all going to have to be below the user experience. So it's as simple, if you need Ether for gas and maybe some type of application layer token for a software license for simplicity sake, that's going to have to be completely abstracted away. So I think it's a little bit different from consumer to enterprise, but I think that's worth noting.
I remember this example from Paul years ago when they were developing, when they were playing around with Ethereum. There was no way for them, for EY, an auditor, there was no way for them to actually buy the ETH to spend the gas. They just didn't know how to put it on the books. And so he told a story where they actually had to set up their own mining rig in order to get some ETH to convert electricity, which can be put on the books to ETH, because there was no other way to do this. So that was a funny quote that I remembered of his.
And I mean, it sounds funny, it sounds silly, but these are large companies with lots of lawyers, lots of regulations. These are problems that are necessary to solve for. And I think that really another great role model in when I think of kind of the heroes of this evolution is John Wolpert, who previously came from IBM and drives a lot of innovation for the Enterprise Ethereum's enterprise integration and Maenette working group. So he's thinking a lot about this. Open Law, led by Aaron Wright, is also thinking a lot about this by basically having living agreements that can source ether that's necessary as well and have it legally documented.
There was so let's move on with fourth question. It's going really well. I really enjoyed talking to you. This is cool. I told you before I started recording I was a bit nervous, but it's wonderful it's really nice to talk to somebody as insightful as you yourself. So thank you for that. There was the guy who asked if you're related to Alicia Keys. He actually had a better question, and this is the question: where does Andrew see DeFi going as we approach the $1 billion mark and die locked up in DeFi? Are we going to see a larger variety of uses for it, or is it going to stay isolated to the realm of trading currencies? And then Or am I going to be able to take out a loan on a house using DeFi?
So I think all of that will happen. I think you're going to see a full spectrum of financial instruments. I think you will see a lowering of collateral necessary and interest rates necessary to borrow. I think that there will be a new world of regulatory compliance, where regulatory bodies are going to have to understand this technology, and startups are going to have to comply with it and show, I think, good intent. So I would say it's going to grow exponentially. I think the $1 billion DeFi ecosystem could easily be a $100 billion DeFi ecosystem in 10 years, if not sooner. I think that there will be at least a third of startups in that space will have to. I think startups in that space will have to allocate a third of their budget for regulatory compliance, and I think that this will create many more financial instruments. I was talking about the concept of kind of real estate tokenization, and it's very early days, but you could potentially see the granular asset management and risk management of a city, where you could go long the West Village but short the Upper East Side, and have like digitized REITs, and I think we're going to see that type of granularity over the next decade.
I think there was this example. It regarded climate change, and there somebody, I read it a couple of days ago, I can't remember, but there was basically something similar where you could make a bet. It was either through Augur, I can't remember, or make a prediction market where you could either go long if you believe that some markers were false or whatever, and then you could go short if you believe the upside, the other side. There was sorry, I had another question. I just lost it with my rambling about climate change.
No worries at all. Well, one interesting one. While you're thinking about it, I'll give you another example that I thought it's very interesting. In the island of Puerto Rico, where I live, 50% of the insurance claims that were made in the fourth quarter of 2017, when the Hurricane Maria hit, have still not been paid. And I won't go on a diatribe that insurance carriers are in the business of not paying claims, but I will say insurance carriers are in the business of not paying claims. And there are people that have less than $100,000 income. Many of them have less than $50,000 income, that are not going to have the resources to hire a lawyer to then go through the process of fighting with an insurance carrier to pay a claim. And I've seen people just give up altogether. And there are silly examples where something like, if the rain comes through the door, that's covered. But if it comes through the window, it's not covered, because you got these windows from this window person, and that person's liable, not the insurance carrier. I think that we're going to see a boom in parametric insurance, so parameterized insurance. So I see, in addition to kind of decentralized finance, I think decentralized and parameterized insurance, where you can have new insurance policies in Puerto Rico that says, if premium paid and wind is X via some oracle, and rain is Y via another oracle, then benefit is automatically paid to the person who paid the premium. And parameterizing and automating that process will be another huge boom to society. So rather than wait for the claims adjuster to come in. If the rain comes through the window, you get paid. If the rain comes through the door, you don't. And it just takes the John Whelan or the Paul Brody, but that leader in insurance to get through the red tape of their own innovation team and their own legal and compliance, and we're seeing those leaders emerge, almost on a weekly, monthly basis. There are champions within their organizations that are saying this is a better way, and we can innovate and create new types of products and new types of paradigms. So I think that one thing that I would add to kind of the DeFi is the notion of parameterized and decentralized insurance as well.
I remembered my question, or I do remember it right now. You mentioned that startups should take up to 1/3 or whatever it is of their budget to deal with regulatory scrutiny. I think there was this example. It was either Synthetics or DYDX, where you can go long on anything or short, but due to CFTC regulations, Americans can only have a position for 28 days, whereas everybody else in the world can have it. I don't think there's any limit to that short or long position. I think it was DYDX, but I'm not sure. Are these the kind of things? How does I would like you to expand a little bit more on what you said, because it's also in the predictions that you wrote about the regulatory scrutiny.
Yeah. So I think these are the types of issues that have never been previously experienced, where now we have kind of global permissionless substrates for trustless creation of financial instruments and new types of products that are truly borderless. So the construct that we've dealt with to this date have been state by state, country by country, and I think even our parents versus us. I see that people that are younger don't necessarily always, they may say I'm part of the EU, or I may live in a specific country but not have that ownership as deeply. They may say I'm part of the world rather than of the city, state, country, or union. And to that point, I think there's going to be regulatory arbitrage, where you're going to have countries that will see this as an opportunity, like what I would say the America won the internet, but where countries will encourage safe proof of concepts and will try to introduce legislation that is thoughtful but understanding of this new paradigm. And I think that, in talking about Synthetics or DYDX, the technology is built where you could go long or short Tesla stock or Apple stock, but they're not touching that yet because there's not regulatory clarity on being able to go long and short those SEC registered assets. So I think that we are in somewhat of a chicken and the egg, and this isn't going to happen overnight. I think it's going to happen in collaboration, in education with regulatory bodies. I think Consensus has done a good job of trying to help those types of conversations with the Brooklyn project, as example, that created an ontology or taxonomy for tokens. So not all tokens are securities. There are absolutely assets that are securities that can be tokenized, but there are consumer utility tokens that act as software licenses. There are tokens that represent barrels of oil. There are tokens that represent fiat currency. There are tokens that can represent an electron. There can be non-fungible tokens that represent an art asset or an asset in a supply chain. And all of those are assets, but they're not all securities. And having to educate that and define those types of instruments and have a positive, productive, collaborative relationship with regulatory bodies that don't want to stifle growth and innovation and understand that they want it in their country because it will be a net positive for their economy. That's going to take time, and different jurisdictions are going to respond differently, and the difference in the response will be predicated upon probably their history. China is a amazing innovator, but people talk about kind of the Great Wall or the firewall of China, where everything's happening inside China. I don't think China's going to be as amenable to the notion of permissionless, but they may not have a choice. And this may just be a next evolution of the world. And those types of conversations we're seeing, and I think it's interesting. The whole world got really upset about Libra, the regulatory bodies, but really Libra is a permissioned walled garden that could have backdoors for regulators, versus kind of permissionless innovation, where I think that Libra's intent was eventually to go from permission to permissionless. But I think that I think what they've done is done a good job in actually educating governments and society about the digitization of assets or the evolution of the internet to now, instead of just commoditizing how human beings communicate, but really how human beings agree with each other or pay each other or disagree with each other in these kind of live next generation paradigms where you could have an employment agreement that's paid by the minute or the second. Like that type of evolution just has not gotten here yet.
I want to go back. Well, I want to pick in on what you're saying. There's Jack Dorsey, Squares and Twitter's Jack Dorsey. I want to ask you what he gets right and what he gets wrong about the internet having a native currency. But before that, I want to ask you, who do you look to, or what jurisdictions do you look at? You mentioned some trailblazers in companies that are taking up responsibility to pave the way. Who do you look at in a regulatory sense? Are those? I can't remember if it's Wisconsin or Wyoming, but the
Wyoming, yep.
Yeah.
To their credit, Wyoming has done a great job of learning and creating a jurisdiction that is friendlier to entrepreneurs. And I think that as the future of work evolves, you'll see blockchain weeks, if you will. You'll see the New York Blockchain Week, the San Francisco Blockchain Week, the Berlin Blockchain Week. And I think entrepreneurs will find where they want to live, and be able to do these types of meetings where I feel like I'm really getting to know you. And then we'll give each other an in-person high five at one of those blockchain weeks, which could be, if we wanted to go crazy, you could do 8 of them a year, which is 8 out of 52 weeks, which is really less than a quarter of your time in a year. And then you can live remotely. And places like San Francisco and New York, where you have to pay 50% tax, versus a place like Wyoming where you could pay half the tax, people are going to start responding to those behavioral economic incentives, those nudges. And that's just like within the 50 states of the United States. There are other jurisdictions globally. Portugal, for example, said that there's no tax on Bitcoin to Ether trading, or Ether to Bitcoin, crypto to crypto. When you take it out in fiat, I think there might be a tax. There may not be at all. But I think that if there are people that are living very close to there and saying, if I just move 100 miles or 1,000 miles, and I don't have that tax, jurisdictions are going to start winning because of that, and that's going to take time. And in addition to that, I think that's just tax incentive. I think that there are also jurisdictions that start implementing the technology, and pay their constituents, their citizens, to build it. I think that what we're going to see, all of this works on people being employed, or whether they're self-employed or employed by companies. But I think that you're going to start seeing EU, or France per se, wanting to employ a French company to build that. So it employs French people, for example, or at least a company with a French subsidiary, to build French blockchain technology. So creating those types of behavioral economic incentives where it's built in our own native country, whatever that native country is. So I think that jurisdictions have to think, A, how can we help create jobs? And B, how can we make sure that the cost of living is appropriate? I worry, without going too deeply on a tangent, we're seeing central banks money at an alarming rate, and we don't know what the true result of that will be, because it's just since 2008, since the last crisis, that's been really one of the only remedies. And I worry that, for a family that may have $1 million net worth, that, in the United States, for example, where I come from, a gallon of milk that costs $4, very soon could cost $8. So the $1 million that they have has less purchasing power, and that's a problem. So I think that there and that also kind of dovetails by having these next generation assets that are mathematically scarce, and we can actually shift from what I would call subjective institutional trust, where you have some type of finance, some type of middle person, whether it's a government or a bank, providing that subjective trust where they could potentially change those rules, to what I would call mathematical objective trust, which is really where what I think is the power of this technology.
I was thinking what you mentioned about about jurisdictions being incentivized. I was wondering intuitively, this might be a dumb question, it's just something I thought about. What would be the better incentive to either capture value through taxes or getting people to settle in your jurisdiction, and I was thinking of Estonia with their e-residency program, but just the general digitization of the government. So the first would be to capture the value through taxation or whatever instrument, and then the other thing would be to save costs. Like if you can run your country or your government or your institutions at a fraction of a cost. I was just wondering what would be the bigger incentive for a jurisdiction. I don't know if that question makes sense in this way.
No, it totally makes sense, and I think it really depends on the jurisdiction. I had an aha moment a month ago when I learned that the economy of Russia, when you think about the large expanse of Russia, is smaller than the economy of Italy. That kind of just blew my mind. And then I got to
you're talking about notional value, or how do you measure that?
Yeah, gross domestic product.
Okay.
GDP. Yeah. And when I learned that, then I said, then I thought, well, how many citizens are there? And then I learned that this gigantic expanse of Russia has 1/10 the citizens of China, which is much smaller. I think China is 1/4 of the size of Russia and has 10 times more people. So I think there are different levers, if you will, that, if you've got a big country with a small amount of people versus a smaller country with a larger amount of people, the answer will be dependent. on levers like that. So, in China, it may be more efficient to tax them, but in Russia, it may be more efficient because they've got the resource of the land to have more people working there. So I think that those are levers that we would probably have to consider on a per jurisdiction basis.
Let's see. There's quite a few more questions. Let's go to the next one. There was user Delicious Payday. He is looking back at your 18 predictions for 2018. He asks how you feel about a certain prediction, and I think he quoted it. The total market cap of blockchain-based digital assets will exceed $2 trillion by January 1st, 2019. So this was a prediction done in 18. Then let me just quickly read. I don't know if this is a prediction by you, but he also put this in a quote. The price of Ether will exceed $2,000 in 2018. Ether will continue to outperform Bitcoin. Was that part of the prediction as well?
Yep.
All right.
Those were two incorrect predictions of mine. And I think that I've learned in life, and not just in my Ethereum life, but in all of my life, my best learning is when I was wrong. I've hit I would say a few strikeouts, a few singles and doubles, and maybe a home run in helping to build out the Ethereum ecosystem in my life. And I think what I got wrong on that was the time horizon. I didn't expect the drastic pullback, the 90% drawdown, and we can pontificate or kind of think in hypotheticals of why that happened. Some could point to Bitcoin stock to flow, and because Bitcoin was farthest away from its last halving to its next halving, that's when we see the pullback in Bitcoin, and that could have dragged everything down. We could say that Ethereum was going to do proof of stake without sharding, and then that the concept of basically doing them both at the same time delayed the evolution of proof of stake a year and a half. I think that's another meaningful contributor to the drawdown in Ether.
Or the tremendous money that was raised pushing through ICOs that was then subsequently sold. Those kind of things, right?
Yep. Yeah. Absolutely. That was and really, this is where history doesn't necessarily always repeat itself. To use the analogies of the internet, the early days of the internet, you saw a large building phase before the first kind of blow off top and implosion in 2001, and I think that right now we're still in 96, and I think right now we still have less than 1/1000th of usage of Ethereum, or 1/10,000th of usage of Ethereum, and I think that as privacy improves, as scalability improves, we'll have a dramatic increase in that usage. And I thought that I probably, what I got wrong was the time horizon, and I was sitting kind of somewhat central to this within consensus, and maybe many of us are from the future and didn't necessarily appreciate the time horizon that it would take to fully build the technology, build the standards, build regulatory compliance, and move from what I would call proof of concept and art of the possible, which is really where I still think we are, to production systems. And we're just touching that now. But between now and the rest of history, there's a long way to go, and there's a lot of I would say green fields, green pastures and opportunity.
What goes into making a good or a decent prediction, though? What have you learned when you wrote the 20 predictions for 2020?
What goes into good or decent? I mean, I think it's education. I think I am constantly trying to learn. Um, and I think it's having a pulse on the market. We were able to build software and developer tools and an ecosystem for a technology that didn't yet exist. And I think that those were kind of the building blocks that got us to where we are now. And we were at least able to kind of see the art of the possible. And then not believing my own bullshit is probably helpful as well. And what I mean by that is sometimes we get so romanticized with our own version of reality, of our own version of the truth, with our own trajectory of where things will go, that we don't necessarily take the input from opposers, and that could be, let's there can be many different types of opposers. There could be, you could say it at the protocol layer. There are different uh, architectures that could be better. I think it's very early. I give a lot of respect to the Dfinity team, to the Polkadot team. I think to Near. I think EOS is garbage, for the record. So I don't think that that's very worthwhile. But I mean, I think that we're still so early that that there could be evolutions to the protocol. I think that there are other opposers and maybe a regulatory opposition to what's being built. There are opposers in the legacy Web 2 arena. Fang plus Uber and Airbnb didn't make their money by being stupid, and they are not going to just get out of the way. And P.S., they're at all-time stock highs, stock price and market cap valuations, and with booming businesses. If you create decentralized Uber and you try to abstract away the middleman, how do you, as a software company, make money? if that's the product, if you will, that one is creating. So I think also really being brutally honest with myself on what I've gotten wrong, and brutally honest on not being completely myopic or having a single focus. Really being radically open-minded, I think also informs a good prediction.
One of the things, I think this was Vitalik's latest blog post on Ethereum reaching escape velocity. I think this narrative is forming in a way that I at least haven't seen this in the last year or even years, where right now you get the sense that escape velocity is being reached, and I think that might be a big contributor to you being right in your predictions, minus the time zone or the time frame. So I'm checking the clock. I feel like we could talk for hours, but we have about 10 to 15 minutes left, if I'm right. And I have a few questions that I would like to ask.
Sure.
Because people put the effort in. I did, however, wanted to come back quickly, or however much you want to talk about Jack Dorsey, because I'll hit myself if I don't ask this because I referred to it earlier. But can you share your thoughts on what he has got right, what he has got wrong, according to you?
So I would say, first off, what Jack Dorsey got right was building a legacy application Web 2 company successfully. Millions of people, or let's just say thousands of people, to be conservative, start businesses, and 95% fail. And we're all and failing is a probably a strong word. Hopefully, people learn from the I don't even want to say mistakes, but the evolution of their life. And but he's managed to create a product that millions of people use, It informs people's thinking. That said, I think that there are issues with it. I think that for example, I hit 18,000 followers on Twitter, and I think I was kind of speaking more about Ethereum than others. And magically, my numbers of followers of Ethereum have, or on Twitter, have basically stayed the same. I think that there are literally bots and algorithms that mute or increase the voice or decrease the voice of selective narratives that they may want to highlight. And that could happen in something like politics or something like more Bitcoin than Ether. So I think that there is a narrative issue with Twitter, and I think that a decentralized Twitter would make sense. I think there are early attempts at that. The UX isn't there yet. The customer base isn't there yet. I forget the name. I think it's like Peep or Peepo or something like that. Yeah, Peep. Yeah, so I haven't signed up for that, and I probably should be a better Peepith community member. But
how do you think about his view about the internet needing a native digital currency?
So I think it's narrow, and I wonder if it's biased in the fact that he still wants to incorporate the usage of his Web 2 baby in Twitter, where I see like you could easily add tipping functionality. I don't think you could use it with Bitcoin due to settlement latency and block propagation time. And I don't think that I think that just kind of the currency aspect is the patient zero, the MySpace, the alpha use case that this technology was born on. But now that we've already seen that trustless distributed financial systems can provide much more than just the transfer of value. We've seen the creation of lending markets. We've seen the creation of supply chains. And I just think that his view of the world may be informed by how he would think of his legacy Web 2 product evolving with adding just that functionality for it to be relevant in Web 3. And I just think that one thing he has is a user base, and that's an asset to him personally. And I think that decentralizing it, or not charging advertising revenue for it, or creating a decentralized version of it where that's peer-to-peer, where he basically disintermediates himself, is not in his best interest. But on the other side, the Valley has a lot of smart people that didn't get there by not doing product market fit. And I'd argue that his Twitter has had better product market fit than 99% of all decentralized applications. So maybe there's something that I'm looking at incorrectly. But I think I would stand beside the point or on the point that I think that his view may be biased to self-preservation and how to integrate just the transfer of value with his legacy Web 2 app.
Yeah, I made this post earlier somewhere. I was playing around with Pool Together. I don't know how much you know about the no loss lottery, and I couldn't help but think that if you look at this if you're in the blockchain space and you look at this, I think it's a genius kind of. It's just a small improvement, but it's a wonderful product. And the fact that you cannot build this anywhere, or it's hard to build this on anything else than Ethereum, has to, at least in my way of thinking, has to force you to think more about Ethereum's capabilities. And if you take Jack's position, it's just, I wonder, do you stay blind to this? Do you stay blind? Because this is something that is actually helping people. This isn't about technological fights or memes or crypto Twitter fighting. This is just a real service or product that actually makes the world a little bit better, or makes lottery a and turns a regular lottery into a no loss lottery. It's a wonderful idea.
So to that point, I think that the winners of the Web3 will be the type of thinkers that use behavioral economic incentives. So basically nudging people to do what's in their own best interest. Will that type of behavioral economics, whether it's a decentralized Facebook where I get $1 a day for looking at advertising versus Mark Zuckerberg getting that $1 a day, or instead of losing my dollar in the lottery, I can enter into this no loss lottery, and those types of nudges where it's completely apparent that it's in my own best interest to do X versus Y.
All right, moving on to the last couple of questions. Do you believe that enterprises will eventually move over to mainnet applications, or will there always be a place for permissioned versions of Ethereum?
So I think there will always be permissioned needs, very, very similar to intranets and the internet. Swift is a great example of that. Swift doesn't touch the public internet, and Swift transfers a lot of value on Earth. I think that there will be a decreasing amount of permissioned network usage as scalability and privacy increase.
What do you think of EIP 1559? We've touched about it briefly, but maybe just give your summarizing thoughts.
I think it's brilliant. I think it's necessary. I think it's elegantly designed. I think that it's long overdue.
What are your thoughts about transparency, neat and clean communication, deadlines, and marketing? I consider it embarrassing that YouTube, for example, is full of scam videos when searching ETH 2.0. I don't know if those, so Swiss Tomu asked that question, but those are two different questions, I would say. So maybe just stick with the first part, your thoughts about transparency, neat and clean communication, deadlines, and marketing.
So I mean, from whose perspective? From the Ethereum foundations? From a company building on Ethereum? I think it depends on the vantage point. I think that to use a legacy analogy, ICANN that governs the internet, or Ethereum Foundation that right now is driving research on public permissionless Ethereum, should be transparent, should be I would say able to be thought of as a nonprofit that is able to share as much information as possible. I think they should also be able to pay the some of the smartest people in the world, PhDs in distributed systems, a fair salary, for those scarce resources. So I think there's a balance there. In terms, I believe there was some part of timelines that you referenced, and timelines are easy when you're building an application on legacy internet, or easier than when you are creating bleeding edge distributed systems protocols. And I think that everyone loves timelines, but these are hard problems that need to be solved, and we have to be cognizant that they're not always going to be hit.
Yeah, I think I don't want to speak in his stead, and I might be projecting, but I think from an investor's point of view, it could be a way to deal with the 2-year bear market that we just went through. That whenever a new deadline is missed, or something that was first set in stone or whatever is missed, or the deposit contract not going live on DEFCON, that might be the perspective of the question. Just wondering if there is any, in this distributed world, if there's any way to improve on that. But I guess it's really hard.
Yeah, I think it's hard, and I think that as we get through the major hurdle of, I would say, phase 0, 1, and 2, I think that the critical mass will be there, and I think there'll be smaller incremental upgrades that subsequently will probably be able to have more succinct and manageable and reliable timing.
Closing question: what do you think about the marketing DAO?
I'm a fan of it. I'm a fan of marketing DAO. I know a lot of the people that are involved in it. Some brilliant marketers like William Mugayor, like Amanda Gutterman, and others. I love the notion of kind of decentralizing an employer, if you will. I think that the Ethereum Foundation has been rightfully focused on research, and I think that additional clean fact-based collateral to different personas, to the engineering personas, to the enterprise personas, to the government personas, to the let's just say consumer personas are necessary. So you really have to hit the marketing conversation at different levels. That said, all the marketing in the world can't make up for the technical prowess, and we can have the best marketers in the world, but if the protocol doesn't scale, and the protocol doesn't have privacy and confidentiality, and the protocol doesn't have a million engineers using it, that will be, I would say, penultimate or most important. So I think that there's been a ton of time, and I think I've done some of it as well, of kind of explaining the art of the possible. And now it's also time to transition to showing the possible in real time.
Any closing remarks or thoughts to anyone listening to this?
Keep going. Just keep going. We are in the first out of the first inning. For the U.S. people that know baseball references, or in the first minute of the football match, to Europeans, it's very early days.
Andrew, thank you very much for making the time. I really enjoyed this. I look forward to seeing your predictions play out, and I just wish you the best, and I hope we get a chance to chat in the future as well.
Absolutely, Kobe. I'm happy to do this whenever you'd like.
All right. Thank you.